All right, so in this video, I'm going to be talking about the cryptocurrency market and strategy around how to play this bull run that we're currently in and that's getting ready to really take off. I'm going to be speaking on cryptocurrency coins and tokens they may want to take a look at and that are really primed to do well over the course of the remainder of this cycle, and strategy around when to get in, when to get out, and how to do research on coins and tokens that can serve you well. And so, to provide some context around my experience with cryptocurrencies, I got into the space back in 2017. I saw Bitcoin run from about $1,000 to $20,000 summer 2017 to that December, before then coming back down to 3,000. And so I've seen multiple bull and bear markets when it comes to crypto. I saw 2020 to 2021 when DeFi, decentralized finance, really took off and became a thing. And when Bitcoin ultimately went up to 69,000, that cycle, towards the end of 2021, before then correcting into the bear market that we then came out of last year. And so over the past, I'd say, year, we have more or less been in a bull run, and we're now starting to move into the next phase of the bull run, to where these coins and tokens start going parabolic. And there are a number of different catalysts that are important to pay attention to and understand, to know why the market has been moving and the direction it will go in as we move forward over the next 8 to 10 months. So we have the Bitcoin halving event that took place in the spring, where the circulation of Bitcoin gets cut in half every 4 years. There will only ever be 21 million Bitcoin that are mined in total. We had the passing of the Bitcoin and Ethereum ETFs, spot ETFs, that were passed by the United States SEC this year. We also have the largest institutions like BlackRock, Fidelity, JP Morgan, these kinds of companies and institutions that are now starting to invest in Bitcoin, invest in Ethereum. BlackRock has started their fund, the Build Fund, where they are investing in real world assets and using the Ethereum blockchain as the network for this fund. And so crypto is crossing that chasm to now becoming a mainstay and a more credible market, financial market, and ecosystem. There's a term Web3, to where we think about decentralized technologies, and this term of Web 2.5 that kind of merges traditional finance and decentralized finance is sort of what is in practice now starting to happen, where these large institutions that basically run the world are not putting their hands in the pot of this Web3 decentralized space that has been getting built over the past decade plus. And so the market goes in cycles, right? So you'll have bull runs and bear runs. And if it's a promising market, or if it's a healthy market, you will see it continue to go up over time. Every 4 years on average is how long you see a cryptocurrency cycle tend to be, both bull and bear combined. But with the fact that you're now seeing institutions pile in, these larger, more traditional legacy institutions pile into the space, this may be the last aggressive kind of crypto bull run that we see before it becomes a more stable sort of market, not unlike your equities market, options market, and so on and so forth. And so, for that reason, getting exposure to and doing the research to know which cryptocurrencies to either invest into for the long term or to trade for the sake of this current market cycle is extremely important. And so, starting with Total 1, Total 2, and Total 3. So, to explain what this is, I'm going to have my trading view chart up, which I use for technical analysis. Is Total 1, or just total, is the total cryptocurrency market cap. And so this includes Bitcoin, it includes Ethereum, it includes all of the altcoins that get tracked. And so you want to look at total, or Total 1. You want to look at total two, which is the market excluding Bitcoin. So it's Ethereum and all of the altcoins. And then you also want to look at total three, which is the market excluding Bitcoin and Ethereum. So it's simply just the altcoins. And the reason why it helps look at these is because typically during these markets, Bitcoin runs first. Right? Bitcoin is the front runner where money goes into, and then what happens is as the cycle continues, in order to get more aggressive gains, traders and investors will now start to shift their funds into Ethereum and then shift their funds into altcoins. Also, as the cycle continues, retail traders and investors start to pile in more. And you will notice that the altcoins tend to be or seem more affordable, or you can typically get higher returns and multiples on them. And so you start to see uh, the liquidity of capitals move into your altcoins. And so that's total one, total two, total three. And so if you look at total one, you will see this start to rise further as the market continues up, but you'll see it rise higher than where total two is. And so you'll notice that over time, the trend will start to shift more to where total two starts to rise, and then total three, they sort of play catch up to each other. And so beginning with just looking at Bitcoin. So Bitcoin is currently at 63,006. It's been ranging in this area. We have this descending wedge. It's been basically cycling back between the 50s, low to mid 50s, and then high 60s to low 50s. And it's literally just been bouncing back and forth. It has just rejected again for the fourth time. And we're going to see now whether it bounces back down to that 53 area before officially breaking out and continuing to higher highs and higher lows, or whether it just actually breaks out from here. But from what we see, it actually looks like we may get another pullback before we actually break out. And so these descending wedges, this is one pattern that I do like, because as it squeezes in further, you know that a breakout is imminent. And this is one way of being able to sort of gauge where price can be. And so if you look on Twitter right now, crypto Twitter is going super crazy because September closed as the most bullish month that we've seen for crypto ever. And so we had a 7% return. September is often actually a negative month for crypto. You see here, we had a 7.75% return. The September last year was 4%, but from 2018 to 2022, those were all red months. Typically, when we do have a green month in September, the remainder of the year is also very green. What I would be paying attention to is where we go from here. I wouldn't be surprised to see not just price bouncing back to that 52,000 area, but potentially even having some sort of liquidity event where we go under slightly, that kind of shakes out people who are super bullish and super long. Something that you learn is that when the sentiment is a little bit too bullish, that you want to just be careful, because oftentimes the opposite is waiting to happen. And so overall, very bullish, even in the short term for the market, but want to just pay attention with what happens next over this next week or two. And I want to see an actual breakout from this descending wedge to then make actual higher highs, and then new all-time highs for Bitcoin. Another thing to mention, which I didn't mention earlier, is that this is also an election year. The Democratic and Republican sides seem to be both warming up more to crypto now. The Republican side typically has been more of a proponent. We're even seeing that Trump, in some ways, looks like it's actually weaponizing crypto by looking to gain support from those single issue voters by launching his own crypto platform. He actually just launched a crypto platform in the last couple of days. But on the Democratic side, we're seeing that Kamala's now accepting Coinbase stock as a means of paying for donations. And overall, the Democrats are also starting to warm up on crypto. And so election year is typically also an additional catalyst for the market to continue up. And so to just bring in the fear and greed index, currently we're at a 50, a neutral fear and greed. So the market is neither over bullish or over bearish as far as fear and greed goes. But if you look on crypto Twitter, we seem to be very, very bullish based on just like the overall sentiment. And so that's Bitcoin. You see, back in 2022, we went up to 69,000. That was more like a wick before then breaking that structure to the downside. And we've been more or less consolidating / ranging in this area. And we're going to see what then happens next. All right, so we should talk about Ethereum. So Ethereum, I believe, is bottomed out. We see this weekly trend line that we've now come back to. We went up as high as 4,000, which was approaching our all-time highs of 4,800. We've come back down to 2,100, which was a significant pullback, but a pullback to this major weekly trend line. And there are a lot of people who have started to lose faith in Ethereum. I'm personally haven't been a fan of Ethereum for a long time, but that's more so because I just feel like the blockchain doesn't really make sense. The transaction fees are way too high. The speed is slow compared to other blockchains. So they're just better alternatives out there. But Ethereum had first mover advantage, and we're also seeing your BlackRocks and these institutions back it. Ethereum ETF launched this year. And so at the end of the day, it's not always about just the technology itself. It's also about what surrounds it. And Ethereum is one that does have that backing. And I do believe we will see higher prices for Ethereum, but I don't love Ethereum. Solana is having greater volume than Ethereum consistently this year. It's a more exceptional blockchain overall, cheaper transaction fees, faster transaction speeds. It's been the home for meme coins this year. And I think a lot of people, it's going to be a lot easier to onboard the average person onto a blockchain like Solana. That like nobody's going to be putting money on. No average person or retail investor at this point is going to be operating within the Ethereum ecosystem, at least the layer 1 ecosystem. You have the layer 2 platforms like your Arbitrums or your Optimisms, right? That with those, that's where the actual transactions and use of the platforms may be taking place, but it's overcomplicating the situation. Why use these layer 2 blockchains that are attached to the layer 1 when you could just use a chain like Solana? And so I'm very bullish on Solana. I believe we're going to conservatively $500 this cycle and likely higher. And so this is one train to get on. It's also attracting institutional interest, and maybe no ETF this cycle, but potentially Solana, a spot ETF could be coming in the future. And so I look at Bitcoin, I look at Ethereum, and I look at Solana right now as like the big three. And those are, to me, assets to invest into. I would be comfortable definitely with Bitcoin and Solana. Again, I actually don't really mess with Ethereum like that, but at least with Bitcoin and Solana, I'd like going past this cycle. Those are some assets that you would want to consider being in or really monitor over the long term. And then from there, it starts to go up in levels of risk, and you start navigating between what is an investment and what is more so a trade. And so you have something like Avalanche, for example, and I really like Avalanche because it is a sleeper in a lot of ways. Avalanche is also attracting a lot of institutional interest. Avalanche is becoming really one of the homes for gaming, like crypto gaming, and Maple Story. For those who have played traditional sort of Web 2 computer games, Maple Story was a super popular game growing up. They just signed a partnership to expand Maple Story into a blockchain based game. Avalanche also has partnerships with companies like Deloitte and JP Morgan. And so Avalanche, I believe, is one blockchain that is definitely not being talked about enough, and quite frankly, could actually be in that same sort of tier as your Solanas and Bitcoins at this point. So this is another one that heavily paying attention to. It's also only at $28 currently. And if you look at Avalanche over the last cycle, Avalanche went up to $145 last cycle. It's currently at $28. And we're going to see way more money flooding into the space this cycle. And so Avalanche is one where the potential upside is likely even more so than your Solana, for example. And so this is one that do research on. And so Solana, Phantom, and Avalanche are examples of blockchains that have their cryptocurrencies that were also factors in the previous cycle. I believe all launched last cycle. And so in some ways, you can look at them as even like the older layer one blockchains. These are more established. And Phantom is getting ready for an upgrade. It's the Phantom Sonic upgrade, which is going to be a significant upgrade in terms of its speed and functionality of the blockchain. And so Phantom, once it has that upgrade, it's catered to happen in December. We will likely see a significant jump from that. And it's been running more significantly than some of the other altcoins that we're seeing over the past few weeks. The market cap of Phantom is also lower compared to some of the others that we've seen. The Phantom market cap is currently 2 billion compared to, let's say, Solana right now, which is 72 billion, right? So a lot smaller, right? A lot less activity currently, but it's one that is definitely worth paying attention to, and again has potential for a lot more upside. And then the last cycle, we saw Phantom go up to 3.2 dollars about. So that gives a gauge of where we may be headed to in the short term of the cycle, because again, more money is flooding into the market overall this cycle. So I do look at previous cycles all-time highs as a checkpoint. So now from there, I'm looking at what I'm considering the new cycle layer ones. And so we've talked about Bitcoin, we've talked about Ethereum, we've talked about Solana, we've talked about Avalanche, we've talked about Phantom. Those are all the previous cycle layer ones. Injective, although Injective has been launched for a long time, the narrative around Injective is starting to take off more because Injective is also connected to AI, and Injective has been gaining traction this cycle. We went from $2 all the way up to $52 in March, and then now we're at 24. We bottomed out at about 15 in the last month. And Injective is one that I look at as like a new layer one that is being spoken about in a similar vein to your Avalanches and your Phantoms of the last cycle. And so Injective, Sui has been rallying like crazy over the last couple of weeks. Is almost at its all-time high. Actually, its all-time high is $2.1. And this is one that you may want to even be careful of and not basically put money into it right now. But people are calling Sui Solana a potential Solana killer because of the kind of traction it's gaining, this speed of its blockchain, the partnerships that they are developing in the ecosystem. And when we look at the market cap of Sui's market cap is $5 billion currently. And we've literally seen Sui more than double in price in the last like 3 weeks. Injective is $2.4 million market cap. And so Sui is definitely one of the favorites for the cycle and will blow past, that all-time high of $2.17. We've got Tia, which is Celestia. It hasn't been performing well, but I do expect this to turn around. You've got Say, which is another one being popularized for this idea of a parallelized EVM, a blockchain, which is this idea of being able to do multiple transactions at the same time. And so again, Say, along with your Injective, along with your Tia, I would put Sui, and then also the Ton blockchain. I put them all kind of in the same boat around these are narratives that have started to take off this cycle. And when it comes to them, they are sort of your more popular, newer blockchains as far as narrative goes. Ton is the Telegram's blockchain. Telegram has an existing millions and millions and millions of users already. And so as far as getting them to adopt blockchain technology, they have access to that existing user base, which is one of the reasons that the space has been very bullish on Ton. The CEO of Tom unfortunately got arrested recently, and then he came out, and it seems that Tom will now be giving information like IP addresses and other information to authorities whenever asked, which is actually a little bit bearish for the blockchain because it kind of takes away some privacy. But nonetheless, I see Tom as a blockchain that will continue to appreciate in price. And with that, those are the layer one blockchains that I wanted to discuss, the blockchains in general that I wanted to discuss. When I'm thinking about this from an investment versus a trading standpoint, I look at Solana and I look at Bitcoin specifically as assets that I want to be in for the long term. Again, I don't love Ethereum, but I would trade Ethereum for the cycle, regardless of what ever happens to it over the long term. I believe that there is an asymmetric risk to reward for Avalanche, given that it's only at $28 currently, and its next stop, we would see it at $65. And its previous cycle, again, we went up to 140, almost $146. And Avalanche is a very strong asset. Avalanche, to be honest, probably what I feel the best about when it comes to upside, along with level of risk, because it's definitely on the lower risk side in terms of the overall cryptocurrencies that are out there. And then as far as entries and exits, so of course, catching the bottom is where you want to be, right? In the run that we saw last fall, which was what kind of marked the beginning of this bull run, we saw Avalanche go down to $8 and then ran up to 47 and then 64, right? Which was that a I want to say 6x and 8x respectively from its lows. We bottomed out in August at we tapped 17, but around that $20-$21 range. We're at 28 currently. And so 65 will be a little bit above a 2x. And then making our way to about $100 would be a little bit over 3x from here. All-time highs would be about 5x. And then we kind of see from there. And so now when it comes to entries and exits for these markets, especially when it comes to playing the bull run, and this is my third time seeing this, and I saw Avalanche go the last cycle in 2021. I saw it go from single digits to its all-time high. And the thing about the bull run is that you don't want to be your own worst enemy, because what happens is that as price starts running, you start feeling things like FOMO if you are in a different asset that is running at that time, and you start selling and buying and selling and buying, and especially if you're not actually really a trader, you are going to end up losing your money if you overtrade. So you want to decide on the assets you're going to go into, and you can look at a coin market cap that has the hundreds of different cryptocurrencies that are out there. You know that you're going to have the larger cap cryptocurrencies, you're going to have the medium caps, you're going to have the smaller caps, and you look at the market cap, you do research on the assets themselves, and you decide on what you want to trade into. But I believe a set and forget mentality will serve you well, especially at this point in the cycle. So if I'm deploying funds into Avalanche right now, and I would say this area is a solid one, I would maybe put in, if I were going in right now, I'd maybe put in half of the total position I want in right now, and then I wait to see if we do get another correction to then deploy further. But if you're going in right now, I literally wouldn't touch it until we at least get back to our local high, which was $65. And then I wouldn't touch it again until we get to our previous all-time high from the previous cycle, which is $146. And then I'll then just leave some of the funds within the position for it to continue to run. And so you shouldn't really be going in and trading out. You want to decide and this is my approach, in that you want to decide your positions and what you're going to stick with through the cycle, and you want to just commit to them. If you spread your investments and trades across a couple of different asset classes and a couple of different types of coins and tokens, then you will be able to get the outcome you're looking for, because you might see that the layer ones move at a point in time, and then you see that the gaming tokens all kind of move together, and then you see that the AI crypto tokens move together, and then the meme coins move together. So if you have some of each that you are high conviction plays for you, then that will be good. But you want to see your moves play out, and then what you can do is, once you've seen a solid multiple on a couple of different assets that you're in, you can then rebalance your portfolio, spread them out, and do an update at that point in time. So let's say Avalanche goes up to 150, but then you have a position in Injective, and let's say Injective only does a 2x. Then with Injective, you can say, all right, well, Avalanche did 5x, and so Injective only did a 2x. And so if you had deployed the same amount of funds into both, then at that point you can say, all right, I want to rebalance it, because based on the research that I did, I like where Injective may go from here for the remainder of the cycle, or I don't like where it would go. Let me place another coin or token in its position. And so that's sort of my strategy around deploying capital across the different assets that I like, seeing what happens, rebalancing, seeing what happens, rebalancing. And then the biggest thing is making sure to take profit when we are very frothy. You start to really understand fear and greed when, in these times where the market is correcting heavily. You understand fear, and the market is really rallying. You understand greed, and you want to take profit. And that's one of the mistakes that I've made in the past, where I have held too long, right? And I've experienced round tripping assets. And so you want to not make the mistake of holding the position because you think we're going to go up way higher than you originally even intended for it to go. And so you can have different checkpoints. Injective, a good checkpoint would be its recent high. Another good checkpoint may be $100 for example, and then you could just take a percentages off the table as you go up. Maybe at the recent high you take 25% off, right? And then at $100 you take 50% off, or that kind of approach is something that could be helpful. But what I would say is that you want to find something that works for you, and that a system that you can adhere to just have a process of how you're going to take a profit. And you want to decide that now, because when the market really starts moving and you start feeling FOMO and you start feeling all these other emotions, you start feeling elation, you start feeling these different things, you want to be able to revert to the plan that you have and the system that you have in place to make sure that you carry out the assignment as appropriately as possible. And so I want to talk about a few other assets. So you have DOG. So now we're talking meme coins, right? Again, when I think about meme coins, I don't look at meme coins as something that I would really invest in. It took me quite a long time to get on board with the idea of meme coins even. But I'm starting to realize, the idea of memetics, which is how culture expresses itself, is a real thing. I understand at this point. And DOG, so this DOG coin, which is not to be confused with Dogecoin, is a major meme coin on the Bitcoin blockchain. And so Bitcoin DeFi, so decentralized finance on Bitcoin, is becoming a thing. And so this DOG coin is one that really represents that. This is super high risk, but DOG is actually currently at a $400 million market cap, and is a prime to go to a multi-billion-dollar market cap. This is one here. You have Dog with Hat. Dog with Hat is currently at a $2.5 billion market cap, It's run quite a lot. From its lows were down at about 1.3, 1.4, and then now it's up at 2.5. It's really run this past week. Basically, the past week has just been going. It's just been going up higher and higher. Dog is one that I see really taking off, and it's a meme coin on the Solana blockchain. So as we see Solana move, the dog with hat coin, which some are seeing as the Doge coin of the cycle, but we'll see, will also move and will move likely even more aggressively than Solana. You can get some real beta by having a coin like WIF that you have a position in. But again, the meme coins, of course, higher risk than these foundational type of layer one chains and those kinds of cryptocurrencies. I want to talk about some of the crypto gaming tokens. So these kinds of tokens are, again, super higher risk compared to your blockchains, but also great potential. So Gene, which is in regard to Genopets. So Genopets is a crypto game, kind of like almost like a real life Pokemon, if you will, where you have this animal that this sort of futuristic mythological animal that moves with you. It's part of the move to earn or fitness finance category, where these animals move with you as you are walking and running. And so as you take steps, you're able to bank those steps, and that causes these animals to level up, and you can race friends and battle friends. They now have a partnership with the Ton blockchain, where you can battle friends on Ton through Genopets. But the app itself is Solana, is a Solana app. And even just during this cycle, so like for example, October 2023, we had a run where we went from 0.14 to 0.69, which is about a 5x. From February to March, we went from 0.23 to 0.5, which is 2x. And so you see these times where we have these real impulses up. June, beginning of June to really even the second week of June, we did a 2x super quickly. And so we're going to see what Genopets ultimately does. It will continue to have these impulses where it's almost like a quick 2 to 3x. But what I want to see is it actually turn around and break structure to the upside. And so breaking structure would mean that we go above recent weekly highs in this scenario. So if we break above and actually close above 0.68, for example, and we start making higher lows. And so what that would look like would be we come up, break up above this local weekly high, which is from December, likely pull back and then continue up in this direction. That is what I would want to see, and what would kind of provide a real setup for an actual real aggressive move for Genopets through this cycle. But if not that, these impulses we would see along the way. But again, these kinds of assets would be trades for this bull run. Crypto gaming is a serious narrative that's going to gaming is such a large market in general. And so when these gaming tokens take off for the cycle and just in general, these kinds of assets are good to be in. Genopets, one of the reasons I like Genopets, besides the fact that I was a Pokemon nerd growing up, is that the game itself is enjoyable. The financial aspect is not necessary for the game to thrive and to do well. And that's one of the reasons why I like it. I've been monitoring Genopets since it launched, the beta version 2 years ago. And it's still in a beta version. It's like I believe, phase 3 of its beta version, but it's definitely one to take a look at. It's only at, I believe, an $8 million market cap, currently $6.8 million market cap. And so this would definitely be, super high risk kind of play. When it comes to the gaming platforms in general, it's like the gaming studios that are this safer kind of plays when it comes to games. So you've got something like Gala Games, which last cycle, it went up to that 0.7 to 0.8 range, which is literally 50x from where we currently at. So it's currently at 0.02. So 0.1 would be 5x, 0.8 would be 40x from here. Oh no, 5 times 8, yeah, 40x from here. And so Gala Games is one of the favorites for us. You've got Gala Games, and Gala has a whole ecosystem. You've got Gala Games. You've got Gala Music, which recently launched a music token. Yeah, it's a decentralized music type of platform. You've got Gala Film, right, which launched these film nodes, and they're building out this whole, gaming and entertainment music ecosystem for Web3, and so we'll see, what it does. And then lastly, the topic I want to also cover is the AI tokens. So you've got Bittensor is a popular one, Tau, and this has rallied crazy in the last just 3 weeks. September 9th, Tau was at $281. Tau is now at $605, which is just crazy how fast this has moved. It's one of the favorites for the cycle. Tau is like a decentralized chat GPT or open AI, probably a bit more how to describe it. And so it has its own sort of decentralized text to image platform, a decentralized chat bot, conversational AI kind of platform within it. And yet this is really, really moved over the last few weeks very fast. And I expect other altcoins to start showing this kind of activity. But this is to say that AI crypto is something that is really a popular narrative. In addition to Tau, you've got coins like Render. Last cycle, we saw Render at about $6, so it's already hit its all-time high. But Render, this is looking at decentralized GPU. So if you think about companies like NVIDIA, that at one point this year was actually the most viable company on the equities market. Render is like a decentralized version of that, where they're pulling from this global network of graphic processing units. And so this is one that is definitely primed to go. This cycle, you have Worldcoin is actually Sam Altman, who's founder of OpenAI. That this is his cryptocurrency, like he's one of the founders of this platform. It's a privacy type of token that is meant to help with identity on the blockchain. And it's super important because when you think about things like deep fakes and AI and authenticating assets online, Worldcoin is is like a concept that can help with that sort of thing. You've also got Node AI, which is similar to a Render. Node AI is only at a $55 million market cap, and these are examples of lower market cap type of plays. Where I mentioned Node AI at only $55 million market cap, but Worldcoin, Render, and Tau are all higher market cap assets. So Worldcoin 960 million, Render 3.4 billion, Tau 4.4 billion. And so those are all larger, and having a distribution of lower caps, medium caps, larger caps. The lower caps, as you can imagine, are typically higher risk. The larger caps usually are more proven and established kinds of cryptocurrencies. And so I'm going to stop there as far as the list goes. That's about 12 assets on that list that I feel strongly about. Do your research on them. Get into the Discord, get onto their Twitter channels and see the conversation around Twitter. Research them, use an AI tool like Perplexity and do some research around them. But this should give you a sense of maybe some particular tokens, cryptocurrencies, and tokens to take a look at. But there are a list of hundreds of others that are worth perusing, going through. The thing about the crypto market, especially when we get to the bull run, is that the rising tide lifts all boats. And so even coins that aren't great fundamentally or even technically can still do well. But you want to be in those, you want to develop a conviction for the assets that you're in, so that you're able to hold during the times where corrections happen, because corrections will happen during the cycle. You want to have predetermined targets, and you want to make sure that you sell soon enough. But I believe that we are going into a more aggressive phase of the bull market. You saw what an asset like Tau has done, and I expect this kind of activity from other altcoins in the cryptocurrency market. And so let me know what you think of this video. If you want me to go in depth into anything in particular, there's a lot, right? There's a lot of coins, there's a lot of tokens, a lot of projects, different narratives, catalysts, but it's important that you at least do your research and give yourself the opportunity to capitalize and enjoy this market cycle as it continues to move, and to make sure that you get in at the right time. A lot of these altcoins still haven't moved yet. You saw Tau has really moved aggressively. Sui was another one, the other one that I mentioned that has also had an aggressive move. But then you have, Avalanche that is still at $28, and you have Injective that is just at $24. And so you also have to be patient to know, because certain assets, especially as we start moving even more aggressively, certain assets that are taking off while maybe the one that you're in, it hasn't really moved yet. So you've got to do your research, create a conviction, have predetermined targets, and know what your plan is to take profit, and then deploy into a Bitcoin that you're going to hold for the super, into the future, past this cycle, or into US dollars before the end of the bull run. But some indicators of when it's over include delusional amount of bullishness, when you see people speaking about targets that just don't make sense. Like if you hear someone talking about like a $5 million Bitcoin, price target, just in the middle of the bull run because of how aggressively it's going. When you start hearing things like that, when you start seeing everyone talk about it because it's now back in the mainstream, and most people are starting to like dip their toes into the space, it may be time to start taking some profit off the table. And I can't emphasize enough, because it's a mistake that I've made in the past, that you have to sell when you are in profit and have seen a substantial enough return. So this is my analysis on crypto market in its current state, where it's going, strategies, when to get in, when to get out, coins and tokens to take a look at and to do further research on. And I will see you next time.